if we fast forward with a crystal ball and let's say rates drop 0.25%, okay? They estimate that for every 0.25% that rates drop, 1 million new buyers will flood the market.
What?
Now, this is across the country.
I know, but that's still...
Okay? The problem is there won't be 1 million additional homes on the market. So with supply and demand, your demand is going to increase and your supply is going to get even tighter.
Right.
So what's going to happen? You're going to have a buyer that says, I know you're asking 400, but I'll offer you 405. And then the other buyer is going to say, no, I'll offer you 420. I'll offer you 430. And all of this competition is going to flood the market.
Hello, everyone. I am Lance McHan, local real estate agent in Stockton, California, and I have my friend and business associate, Daniel Sosa. He's a lender with Central Valley Mortgage.
Central Valley Mortgage Group, yep.
Central Valley Mortgage Group. I always cut things off. Thank you for stopping by.
Yep.
So tell us, Dan, how did you get started in lending? We spoke off camera, and you said that you were a teacher before and then you transitioned into lending. How did that work?
Yeah, it's kind of funny how the universe works. It wasn't something that I was aspiring to do. I'm a lifelong resident. Went to high school, went to Lincoln, went to UOP with the aspirations of being a teacher. And I taught special ed for 6 years. And unfortunately, due to budget cuts, I was laid off. And at the time, I'd always had a job at a local golf course. I kept that job through college because I wanted the free golf.
Yeah.
And so while I was teaching, I would work at the golf course on the weekends. And long story short, when I got laid off, one of the members had heard about it. And this was before 2008. This was 2006. And the member was like, hey, I need an assistant. Would you be willing to work with me?
You're like, I'm not too proud.
And I'm like, hey, I didn't have a job. And I'm like, okay.
How old were you at this point?
So this was 2006. So I was 28.
Okay.
I was 28. And I didn't have a job at the time. I was literally looking for work. And I'm like, okay. And he's like, what did you make as a teacher? What were you making? And I'm like, $35,000. And he's like, I'll pay you $38,000. And I'm like,
Sold.
Okay.
Yeah,
all right.
let's do it.
So I had zero experience. He was on the sales side of things, and he needed an assistant. So for the first 6 months, I was trained by underwriters. I was trained in-house, how to look at a credit report, things to look for. And long story short, 6 months later, I get laid off because now we're in the crash of 2008. We're in late 2006, early 2007. Things are moving in the wrong direction, so a lot of banks started to do layoffs. Countrywide, exactly. So during that time period, I'm like, okay, well, I guess I'll go back to teaching. Well, one of this person that I was working for, one of his primary accounts was in Stockton, and he's like, I think you could be really good at doing loans. Why don't you go interview with this person? And so I did. And I became a loan officer.
Well, but you had all this back-end experience that most people getting into the industry don't have. They go in just trying to get a credit app and a loan app going, right?
Yeah.
You have all the back-end experience. You started from the foundation, so that's interesting to know. I didn't know that about you.
Yeah. So at that time, the phones were ringing. This broker was paying, sending out advertisements all over. So people were calling about refinancing. They were calling about pay option arms. They were calling about, all kinds of things. So I was taking apps over the phone, And I quickly learned, I like this. This is kind of good.
I could do this.
And so 90 days later, I realized, all right, if I'm going to do this and I'm going to go all in, I want to build a book of business here locally. So I interviewed at a local real estate office that also had a lending company, and I became a loan officer locally, and that's how I started.
Wow.
That's how I started. And from there, it just grew, and slowly. Took me 6 months to get my first commission check.
Oh, man.
My mentor told me, hey, 90 days, do everything I tell you to do, and you'll make money in 90 days. And for me, it took 6 months.
Wow.
And I almost quit. It was almost to that breaking point of
dang,
I've made no money. It's been 6 months. I really like this, but I don't know how much longer I can do it.
What was the turning point in there for you where you're like, the money started to roll in?
Well, the turning point for me was honestly it was my wife, because I had that conversation with my wife where I'm like, look, we've depleted our savings. So at this point, if we're going to continue to move forward, we're going to have to start using credit cards. And my wife looked at me and she's like, look, if this is what you want to do, I don't care about the stuff. I don't care about the houses. Wherever we hang our hat is home. So if this is what you want to do, then do it. Don't worry about the stuff.
Right.
And so that gave me the confidence that, okay, my wife's not going to look at me as a POS if I continue to do this.
We'll be eating top ramen and refried beans.
And so I remember, I started my career in loans May 1st, 2007. Our daughter was born May 19th, 2 weeks later. Wow. And I hadn't made any money yet. And I didn't close my first loan until October 18th, 2007.
Wow.
Hadn't made a penny.
Well, you got in at the worst time
everybody
possible.
thought I was crazy. But at the same token, I'm thinking, well, I was teaching. I was making $35,000. Like, it's not... I didn't know any different. I didn't know any different.
Yeah. And strategically, when I've always been like, when everybody's going this way, I want to go this way. Like, I want to figure out something a way over here because now my competition is leaving.
Yeah. And I didn't have that mindset yet, but because I didn't know any different.
You're a new entrepreneur.
I was a new entrepreneur. And one loan led to two, then it led to three. And there were many ups and downs along the way. But, and then ironically enough, 3 years later, a bank had solicited me to open up my own branch.
Is that when I first met you?
I think so. When I opened up Stearns Home Loans. I left as a loan officer to open up a branch.
Yes.
And
over there off of Marsh Lane, right?
Yep. Yeah. And as universe would have it, the first company that I worked for to like dial and take applications over the phone, the bank was interviewing him too to open up a branch. And we quickly realized that we were being solicited separately.
Okay.
And so for me, I was only 3 years in, and I'm like, okay, I'm doing really well as a loan officer, but I don't know how to run a business yet. And so we collectively decided two are better than one.
Right.
He can run the business side of things. I can run the origination side of things, and we can build something collectively together. And we did that together for 10 years.
Oh, wow.
And we did really, really well. We did really well with that. And at one point, we had a group of 40 and did really good from 2010 to 2019, basically, until that voice in my head said, it's time to go out on your own. It's time to go back into origination and do your own thing. And that's when I opened up my company. May of 2019, opened up my company.
Nice. And how have things been?
It's been great. I mean, it's one of those things where, you really listen to what has served me well is truly listening to my gut, truly listening to that voice in my head or in my heart that says, like you said, do something different. I was very comfortable doing what I was doing. But for me, I didn't have peace at home. I was working around the clock.
Oh, yeah.
I was getting up at 3 a.m. I was working till 8 o'clock at night. And I could sense the guilt as a father and a husband was growing because I wasn't present at home, even when I was at home. Because this job, this industry
takes a lot out of you.
It can succumb you.
Yeah.
If you let it.
It's hard when you're starting.
Yeah.
Because I told my wife, like, hey, like, I'm going to be gone every weekend. Don't plan anything unless it's like 2 or 3 months in advance so I could clear my schedule so I'm not doing an open house Saturday and Sunday.
It's really hard. Mm-hmm. It takes up a lot of your time. And if you're really in it and you really love it, it's very hard to let it go. It's very hard to not be tethered to your phone. It's hard to not be tethered to emails.
It is, definitely. Even
though it's not life and death and it's not brain surgery,
I feel like
we kind of make it feel that way because it's such an emotional experience for our clients.
Oh, yeah.
And it kind of does feel like life and death.
I mean, we were on the way here and your client was crying on the other end of the phone.
Yes, because of a mistake on their credit. They're thinking their credit's fine, and then we have to verify. My job's to verify.
Right.
And their credit wasn't as good as they thought. So it made a difference to their monthly payment, made a difference to their interest rate, and now they're going from a standpoint of, I was comfortable with that payment, but now that my payment is this, I'm no longer comfortable, yet I really like this house. And so now they kind of feel like their hopes are dashed. But we have a plan in place. We have thankfully, from what they're being told, it was a mistake, but it's going to take time to fix that mistake.
Right.
And so it's stressful. You sometimes you can't help but wear it, those emotions.
Yeah. I mean, it has nothing to do with me, but I could feel it in the air when you were talking to her. Like, I already knew something was awry. And
right.
So, but the other good thing is you have great relationships with these local agents, and you're able to convey those things like, hey, this is our plan. We're going to fix this, but we need a little more time.
Exactly. Because whether it's good news or bad news, the sooner you can let people know, the better. Because the last thing, you're a realtor, we work together.
Yeah.
The last thing I want to do, because some people will take the standpoint of, I have an issue, there's a problem, but I'm going to try to fix it first. And sometimes it could take a couple days. Now, what if
dodging my phone call, bro? Like,
yeah.
What's up?
And then what if I can't fix it? What's the first question you're going to ask me?
When did you know?
When did I know? How long have I known this?
Yeah.
So my standpoint has always been, the second I know, I want you to know. So you were there. As soon as I got off the phone with that client, I immediately called the realtor.
Right.
And I said, FYI, she's in tears right now. She's emotionally distraught. Here's the conversation. Here's the strategy. Here's what we're going to do. We've got a game plan in place to call back on the 10th. And, here's what we're going to do. And so I don't ever want to wait.
Yeah.
It's all important. About transparency. Always. Whether it's the client or the realtor, we got to let
because nothing sucks worse on my end is I'm the listing agent. The buyer's agent is ghosting me, their client as well. Mm-hmm. Nobody knows anything. We're all in the dark. Because they're scrambling, trying to figure out what to do on the back end.
Right.
But nobody knows on the front end what's going on. And, I've had to issue notices to perform, cancel, close, all this stuff. And it sucks, right? Because you're smashing somebody's hopes and dreams.
Right. Time is money. I know as a lender, if you're a buyer's agent, I know that metaphorically speaking, you're loaning me your commission check. You're putting your commission, you're loaning me that check. And you're saying, Daniel, here you go. Get that deal closed. Because you don't get paid until the deal closes.
Yeah, nobody gets paid.
And so I take that extremely seriously.
I never looked at it that way.
Yeah.
That's a very good metaphor.
You are giving me your commission, and you're trusting me with your commission.
Right.
And you're putting your trust, as well as your clients. Mm-hmm. So the second, nobody's perfect. Whether it's a mistake your client made, whether it's, there's a million reasons, things that can happen, that can happen.
So on my end, there's probably 175, 200 different touches on a transaction. How many different touches are on the back end of your transaction?
Well, I try to do all the touches up front. Mm-hmm. Well, that's my goal, is to do all the touches up front. So I want to verify assets, credit, income. I want to verify everything. And so a lot of times new clients, especially that don't know me, they're like, man, ABC company didn't ask me for this stuff. Why are you asking for all this stuff?
I'll tell you why. Because you're in contract and you can't close.
Exactly. Or I want to cross all the T's and dot all the I's before you even find a house.
Right.
Because now I can take my 17 years of experience and I can tell you with confidence, you're not going to have any problems. So that way when you do get into contract, at the worst, all I need is an updated pay stub or an updated bank statement. Or, hey, all I need you to do, Mr. Borrower, is I just need you to shop for insurance. Give me an insurance quote for this property. I've got everything else taken care of.
We're ready to go.
We're ready to go, because when I pre-approve somebody and they have a letter and they're out looking, I'm calling them every 2 weeks. If I don't hear from them before then, I'm calling them every 2 weeks, not only to see how the home buying, how the search has been. Do they have any questions? Is there anything I can answer for them? And then most importantly, I'm asking them for updated documents.
Right.
For that very reason, so that our file is always ready.
Ready to go.
Because the last thing I ever want to happen is for you as an agent to say, Dan, we're in contract. And then I'm like, oh, I haven't talked to that borrower in 90 days.
Right.
Now I'm behind.
Yeah, now you're scrambling and trying to figure out where they're at. Somebody cut their overtime hours cut or something. Like,
yeah.
Oh, you can't afford that $400,000 home now. Now you're down at $350,000.
Yeah.
Changes the whole picture.
And that's the case in point with that phone call that you heard today. The borrower's credit report had expired. We were pushing the envelope on price. Originally, we were qualifying the borrower at $300,000. Then we reassessed at $320,000. Now we're pushing $350,000 and $360,000. At this point, it's like, okay, I need to repull credit. I need to make sure that nothing has changed. Most importantly, that credit scores haven't dropped.
Right.
And here we are. I repull credit, and my instinct was right. Their scores had dropped 60 points.
Wow.
And that made a 0.5% difference on their interest rate, which made a much larger payment.
How much do you think that 0.5%?
That was about a $92 difference a month.
Okay.
But when you're already pushing the envelope, that can make or break a deal. And the borrower had no idea that they had a late on one of their accounts.
And you were in the dark too.
I was in the dark because I had a credit report, which didn't have any of that. Thankfully, I trusted my gut. We repulled credit because the one I had was expired, and we caught it now. We caught it now before they're in contract.
Can you imagine getting a closing?
No, exactly. So I had her call the creditor yesterday. They said it was a mistake. It's not supposed to be there.
Okay.
So now it's going to get removed, but that's going to take time. So there's a process involved. But when you tell somebody and they're like shocked and they're thinking their hopes are dashed, you know, it's that reassurance of like, don't worry, we can get this done.
Yeah, we're in this together.
We're in this together, and we're going to call them back on the 10th. We're going to call them back on the 10th, and we're going to get working on this. So it's all about transparency.
Yeah. Something I've seen you do is you've told people like, hey, like you could make this payment, but you can't technically afford this house.
Oh yeah, all the time.
Like you're going to have barely enough money to cover your other responsibilities, house, food, all this stuff.
Mm-hmm.
Are you aware of things in the industry where people just like, they don't care about their other part of their life as long as they can buy the home that they're just going to shove them in there?
I know it's cliche to say this, but I know this about myself and I know this about you. We truly are ambassadors for our community. This is where we grew up. Mm-hmm. This is where we grew up. We want to help as many people as we can. So there are people in our industry, whether they're lenders or realtors, there are people that are transactional.
Right.
They're transactional, and it's all about the transaction. You and I are relational. And so for me, I'm not going to just do a loan just to do it. I can't. It's just not a part of who I am. It's not a part of my DNA. I'm not transactional.
No, that's one of the number one things I like as a personal friend about you and respect about you, because there's a lot of transactional people out there.
Yeah, and I mean, does it make them bad? No, it doesn't make them bad. But when we're in the referral business and when 5-star reviews mean everything to us, you can't be transactional.
No.
And so one of my main points that I always try to get as quickly as possible with people is, what is your vision? What is your vision for yourself, for your family? What are your goals? Because I want to make sure that their expectation matches the reality of the market. So prior to you and I meeting today, I met with a client. They're like, hey, we don't want our payment to be over $3,500 a month. We have X amount of dollars saved, et cetera, et cetera, et cetera. Okay, great. What price point are you looking at? $400,000. We don't want to go above $450,000. I know that matches their expectation.
Right.
And so it's reassuring.
They would have said 800. You were like, yeah, you're about 3 years late for that, right?
Because I've had clients that come excited and they're like, I found the house of my dreams. It's $650,000, but I don't want my payment over $1,500 a month. I know that doesn't match.
Yeah.
And so we're going to have a totally different conversation. Either they have $600,000 to put down on that $650,000 house, or we now need to match reality and talk about a much lower price point. And so I'm always wanting to know what their vision and goals are, because in the same token, I'll have a client that might qualify for an $800,000 house, but their vision matches a $600,000 house. So just because they can qualify doesn't mean we're even going to talk about that.
Yeah, we're not topping them out.
No, we're not topping them out.
Yeah.
And so I want them to be empowered. I want them to feel, that's the best word. I want them to feel empowered about everything, because my first home experience when I wasn't in the industry, it was a horrible experience. I had no idea what was going on. I had no idea why things were happening. And I remember then, even though I didn't even know I was going to be in this industry, I remember then saying to myself, I'll never let that happen to somebody. I never want this experience to be for what I had. I never want them to experience that.
Right.
And so for me, being a teacher, it really prepared me for all of this, because I educate every day.
Right.
I educate every day. Realtors, buyers, it's all about education. So that when they're making decisions, they're making the decisions on their own. It's not me telling them what I think. I'm educating them about the pros and cons for everything, and then they get to tell me this is what I want.
Yeah, I like to tell people, like, max out what you're approved for. Figure out what that payment is. Mm-hmm. Let's say it's an $800,000 payment. You're like, phew, that is not what I want. But you could figure out, that that's your max, and anything below that is going to be cheaper than this. Mm-hmm. So when you look at the $400,000 payment and it's $3,500 a month, you're like, yeah, I can eat. That's good. I could do that.
Yeah.
But you want to know what you're qualified for, because sometimes that $350,000 home, like, you're going to have to put 60, 80 grand into it that you don't have. But you could spend a little more, 30, 40K more, and get a home that's got a new kitchen and new bathrooms, new flooring, and it's better for you because you don't have to come out of pocket. You don't have to wait 10 years to do your kitchen.
Right. And it's exactly like the family I met today. We talked about a max price of $450. They're hoping to find something in between the $375 to $380 range. And I told them, here's the fun part. Go look at houses that are $350 to $375 and compare that to $375 and $425, and compare that to $425 to $450 to see how far your money stretches and to see the difference in quality.
Yeah, because there's some dogs out there in the market right now.
Yeah. And so it allows them to really see everything, and then that's the other reason why I call them so often, because it's like, hey, how did that go?
Yeah.
How did that go?
But speaking of ambassadors, you also offer some programs for our local heroes, fire, nurses. Tell me a little bit about that.
Yeah. So when I created my company, I literally was saying to myself, what value can I provide my community? Because I truly believe dollars follow value. If you provide value, people will follow, right? And so as a former teacher, I knew that there was going to be a core set of heroes that I was going to give back to. Anybody in education, from the janitor to the superintendent, anybody in, police, fire, dispatch, first responders, anybody in the military, whether current or veteran, and then anybody in the healthcare system, again, from the janitor to the surgeon. I don't care. If you're in healthcare, you're a hero. And that's where it started. And what I do is I don't charge any ancillary fees. Virtually every lender out there charges ancillary fees, or what you call junk fees. Admin fee, underwriting fee, doc prep fee, whatever. Ancillary fees to pay the bills. There's nothing wrong with it. I decided that I'm not going to charge any. I want to pass that savings to my community. So no lender fees ever. And then I also reimburse them for their appraisal at closing, $500. And that's just as a thank you for the service they provide for our community.
That's pretty cool.
And so it saves, in most cases, it saves a borrower $1,500 to $2,500 at least in fees.
But that's cash that they would have to come in to close with.
Correct. And then as a mortgage broker, in most cases, my rates are lower than traditional banks. And that's why it always benefits to shop around.
Right.
In anything you're buying, whether it's a loan, a car, whatever, shop around to make sure you're getting the best deal. And as COVID, hit the market and then transitioned, one of my clients was a UPS driver. And long story short, he was required to work. He didn't have the option of staying home.
Oh, wow.
And then and he was telling me, like, hey, my wife has a propensity of getting sick. So when I get home, I change in the garage. I take all my clothes off in the garage because I can't have my family, at risk of getting sick. And that's when I kind of had this aha moment of like, oh my gosh, there's so many more heroes in the community that we're not recognizing.
Right.
And so now I give back to any delivery driver, any UPS, not UPS, because that would count as delivery, but your postal workers, your utility workers, your linemen, your grocers, your garbage, your sanitation workers, farmers.
Can you imagine not having those people?
All the essential, your truck drivers, all those essential workers that had to work and didn't have the choice, I give back to them too. And I'll never stop. I'll never stop giving back. So whether they're going to buy or refinance, I'm always going to do that. No lender fees, always going to reimburse for appraisals. And then that's transitioned to first-time homebuyers now too. So through our gold medal program, we celebrate that milestone with them. So if they're a first-time home buyer and they happen to just not be a hero, community hero, that's okay. We're going to celebrate first-time ownership home ownership with you, and we don't charge the fees, and we reimburse for appraisals. So for me, I'm playing the numbers game. I want to help as many families as I can.
Well, because that just builds a huge referral base.
Huge referral base.
Huge.
And my competition, they're not doing that.
No.
Or they'll do it for a month, or they'll say, hey, this month is, ABC Hero Month, and it happens for 30 days. I'll never get rid of this.
Mm-hmm. So what are you saying with affordability and interest rates?
Affordability is definitely tough. I mean, with rising rates and rising prices, for those community members that have been here like us, it's hard to fathom looking at a house that was, $100,000 in the late 90s, and now it's quadruple that.
Yeah.
And so it's hard to comprehend that. Mortgage payments, they're $3,000 plus. And so now what I'm seeing is we're needing more buyers on the same loan to qualify. So now we're starting to see that generational family purchase where you have parents,
and siblings,
one of their children, and maybe their children's spouse, or you'll see siblings buy together, or I'll have siblings who are married. Now you have the couples buying together, and they're looking for homes that have 2 master bedrooms.
Good luck with that. But that's challenging. But
you're seeing that. Mm-hmm. You're seeing multi-generational families combine resources to acquire homes.
Reaching out to my audience here, you guys have any questions you would like to ask me and Dan about the affordability or interest rates or homes?
Some of the best neighborhoods in Stockton for affordability and living in a nice area.
I think the Country Club, Victory Park area would probably be the most affordable. The challenge with Country Club is you have sometimes flood insurance, but there are little pockets in there where you don't have it. But Dameron Hospital, right around Dameron Hospital, Victory Park area is probably some of the most affordable. They're older homes, but they're nice little homes.
Yeah, and that's where your expertise comes in, because you're the boots on the ground.
Yeah.
My job's to get the money.
Yeah, right. You're the money guy.
I'm
the neighborhood guy.
But definitely, I mean, there's hot pockets and there's cooler pockets.
Yeah.
How much do you need down to buy a house?
So it depends on the program that you've applied for. So if you're a first-time home buyer applying for a conventional loan, minimum down payment is going to be 3% of your purchase price. And then if you're a government buyer using an FHA loan, minimum down payment is going to be 3.5% of your purchase price. So they're very similar. It's either 3 or 3.5%. The primary reason why someone chooses one over the other is usually predicated on credit score or past derogatory history. FHA is much more lenient. So for example, if I had a bankruptcy, I only need to wait 2 years before I can buy again with an FHA loan. But with a bankruptcy on a conventional loan, I got to wait 4 years.
Okay.
So past derogatory history would also dictate why someone chooses one program over the other, but down payment requirements are virtually the same.
So what are you seeing for closing costs? Like what percentage of the loan? Another 2%?
Yeah, most buyers incorporate or include their taxes and insurance in their payment. They want it that way. So if that's the case, it's dependent on the time of year, but a good rule of thumb is 2 to 2.5% of your purchase price.
So all in
5.5 to 6% of your purchase price is what you would need for both down payment and closing costs.
If you're not getting a credit from the seller.
Correct.
So you're essentially looking at $6,000 per 100,000 to close it out.
Correct.
To be safe.
To be safe. Now, if you get seller credits, that'll minimize that expense. If you apply for down payment assistance, that'll minimize the expense. But there's pros and cons to everything. There's no such thing as free.
Yeah,
there really
is
isn't.
free.
Nothing is free. So you're either going to pay for it through having to pay fees or a higher interest rate. These entities, whether it's a government, local, state agency, they're there to help you, but they're not doing it for free. They're going to make money, and because they have to continue to loan that money. So, for example, when I don't charge any fees, if you go down payment assistance, I now have to charge fees because
they
that
force
agency,
you to pay fees.
Well, they're going to have an underwriting fee, doc prep fee, origination fee. There's a lot of fees that we need to charge, which eats into your assistance costs. Yeah. And then even if there are minimal fees, 9 times out of 10, you're going to have a higher interest rate.
Like what are you seeing in like another point and a
Usually
half?
interest rate is 0.5 to a point higher
Okay.
with down payment assistance because you're getting assistance. And so you're going to pay for it somehow. So if you can come up with the money on your own, whether it's through savings, checking savings, or if you can get a loan from your 401k, if you can borrow from that.
What about
or
gift
from
funds?
family. Yeah, gift from family. Many buyers are doing that.
Okay.
They're getting gifts from family as long as we document it correctly. That is a tangible way to get
So
to
you
save money.
You can't pull cash out from underneath your mattress and go just make a deposit.
No, it's usually frowned upon.
You and I both are American Dream TV hosts. How's your experience been with the process?
At first, it was a transition for me because I didn't quite understand how I could provide value to the community. I mean, I understood the value component for the community. I just didn't understand as a finance host, how I fit in. As a realtor, I immediately saw the connection because there's an opportunity to, talk to a potential seller, list the home. Hey, maybe I can get your house on TV, etc. So it took me 45, 60 days to kind of get my feet or get my bearings. Now that I've done it, I love it. I love the opportunity. I'm honored by it because it gives us a platform to showcase and highlight our community that we love so much.
Right.
And so now we get to highlight that independent business owner. We get to show the community what they're about, what their value is, why people should visit, and then we get to show people why Central Valley is such a good place to potentially live. And so now that I know that aspect, it's really fun. It's really fun.
Yeah, we did Lodi together.
We've done a couple, yeah.
Yeah, and then we just did the Taste of the Mile. That was really...
Yeah.
I can't wait for these two to come out.
No, I mean, dude, driving around in the Nova, highlighting downtown Lodi, that was awesome. And it was just that whole feel of like that Seinfeld show that I was telling you
Oh,
about.
yeah. What's this, driving with coffee?
Comedians driving in cars having coffee.
Oh, yeah.
Something like that, right? And it's just that whole thing of like, let's go for a drive. Let's talk real estate. Let's talk Central Valley community, and let's highlight some businesses. Let's start at a coffee shop. Let's go to this cool restaurant that I like, and let's end it at a famous bar that we all love,
like
right?
We had it was a good time. Like we had the pastries in the morning at Ruby's.
Mm-hmm.
Then we went to West Oak Nosh.
We went to Nosh, yep.
That was really good.
Yep.
They treated us like royalty there.
Yep.
And then we ended it at Ollie's, a local pub that's been in business for 50
years, over 50 years. And so I personally didn't know that the bar had been around that long, right? I didn't know what Nosh meant, right? And I was like, okay. And they make all their sausages in-house, and they make their pretzels in-house, and I didn't know all that. And so to me, it makes me love them even more, and it makes me want to support them even more.
Right, because you know that they're putting their blood, sweat, and tears in that, yeah.
And then to go to Ruby's, and we're treated like family, and they're just like, welcome into our home, and they make everything from scratch. And it's just...
Yeah, it was crazy. Because when I thought they were just like that friendly to us because they knew we were coming, there was cameras with us.
No.
But then as we were filming and everybody that walked in got greeted the same way we did. And I was like, man, that's amazing.
And when I take my kids, because we got to coffee almost every Saturday, same thing. Welcome. Thank you for coming. Please come again.
Yeah.
What can I get for you? Have you tried this? Have you tried that? And so it's just... That's what business is about.
The customer service,
yes,
the experience.
That's what community is about. And so we have this platform to showcase to people and educate them why this is such a great place and why you should not only visit this business, but visit downtown. And then lo and behold, Board of Stockton reaches out. And they're like, hey, we've got this event that we're raising money to help restore the Miracle Mile. Would you be interested? And I'm like, what's that all about?
Yeah, let's go.
And
that was a really good experience.
It was awesome. You got to wear pink pants.
there was like 200 people there.
Yes.
Live music, great food.
Raised a ton of money, and we got to highlight 3 businesses. I didn't know that there was one business owner that owns 3 businesses on the Miracle Mile. They love the Miracle Mile so much that they have 3 different restaurants.
Ululani's, Cocoros, and I can never remember.
The other one is Chilango, the Mexican place. They have this great board. You can get this board of 5 different tacos.
Oh, wow.
It's amazing. It's great. And so you have this family that is totally all in, 100%. and they're all in at the Miracle Mile, and they've got 3 different restaurants. How can you not want to support them?
Oh, they're invested.
I mean, they flew out to Maui to get trained on how to serve authentic.
I went there the
shaved
other day.
ice.
It was
It's
good.
just like Maui.
Yeah, it was
just
really
like
good.
Maui. They're the second franchisee in all of California, and it's here in Stockton. You know, so you can't help but love it.
There's always a line out there.
Always.
Like, it's like if you know Lockford sausages, that line, that's what this line looks like.
Yeah.
And I'm like, that is the best advertising you could ever have. You don't
People
have.
are gonna go, what is that?
What is that? I gotta go there. If there's a line, I gotta go.
Yeah. So we have this platform to be able to showcase people, not only who we are, but this is authentically who we are.
Right.
It's authentically who we are. And we joke around about, competing like, well, who's going to be mayor first? Well, it's because, like, that's our mentality of, like, how can we showcase this community to as many people as possible?
But the cool thing about this platform, it's not just local. It's national. It's a national show.
National Emmy-nominated show. And we have the opportunity to showcase the entire Central Valley, which is as far south as Fresno, as far north as Truckee, and then
Let's go to
we
Truckee.
can we can showcase.
Yeah, right.
We have an opportunity to highlight as much as we want to.
Yeah.
Really, as much as we want to. So, what I would say to the audience, if you know of a business owner, if you know somebody or a business that's making a positive impact in the community, let us know, because we want to highlight them.
Absolutely.
We want to give them the platform to showcase what they're about, what their business is about. And if you're ever wondering, this is completely free. It's completely free to you.
Good point. Yeah.
It's completely free. It's not live television, so you don't have to worry about that.
That was the number one question. Like, is it live? Like, no.
Believe it or not, we do a lot of takes, but and then you have control to allow us to highlight your business in any way that you want. We'll collaborate. We'll storyboard. We'll script. We will. It's a fun collaborative process, but it is 100% free.
But I also think that they learn a lot about their business when we're there engaging with them, because they're like, oh, I never thought about that. I never looked at it that way.
Yeah. And then, I mean, tell them what happens to the episodes once they're aired. I mean,
once they're aired, it goes all over. It goes on Roku, Apple TV, YouTube. There's
Tubi, Amazon Prime, Amazon Fire. I mean, it's
all over.
It's a platform to showcase and highlight either the person or the business in an extremely positive way.
So if you know anybody that you'd like us to engage with, please message me or give me a call, text, whatever. So my stuff's on my page, so please reach out.
Yeah, you can follow me at Central Valley Strong. But yeah, between you and I mean, we're going to highlight as much as we can.
Yes.
We're going to highlight as much as we can.
So what do you see on the horizon for the second half of the year?
Well, it's pretty volatile right now. I mean, we kind of have a double whammy. We're in a recession, and we're also in an election year. And not getting political, but the debate last week caused a lot of volatility. There's a certain party that's they're uncertain with what they're going to do and what their strategy is moving forward, because the debate didn't go very well in their favor. That creates a lot of turmoil in the marketplace, and it creates volatility with rates. So
interesting.
So yeah, in the short term, I always tell my clients, don't risk waiting for rates to drop. If you're comfortable with the payment now, lock it and move on, because this is not a rate that you're going to be married to forever.
Yeah,
it's not.
That's a good point, because there's not a lot of competition out for homes.
A lot less.
There's a lot less.
Gonna happen.
So what do you think would happen if the interest rates dropped a point yesterday?
So if you just look at the simple economics of supply and demand, you look at supply versus the demand. Right now, our demand is larger than the supply, the available homes on the market. Okay, but you have they estimate there's 5 million buyers across the country sitting on the fence waiting for rates to drop. Okay?
That's enormous.
So the best predictor of future behavior is past behavior. So if you look at every recession this country has ever had, if you look at every election year this country has ever had, when the recession ends and when the election is over, rates drop and values go up every single time. So if we look at that as a predictor of future behavior, we can expect or anticipate
rates will come down.
values will go up. So if we fast forward with a crystal ball, and let's say rates drop 0.25%, okay? They estimate that for every 0.25% that rates drop, 1 million new buyers will flood the market.
What?
Now, this is across the country.
I know, but that's still...
Okay? The problem is there won't be 1 million additional homes on the market. So with supply and demand, your demand is going to increase and your supply is going to get even tighter.
Right.
So what's going to happen? You're going to have a buyer that says, I know you're asking 400, but I'll offer you 405. And then the other buyer is going to say, no, I'll offer you 420. I'll offer you 430. And all of this competition is going to flood the market. So for the buyer that says, I don't like the rate today, okay, great. Then let's think about that. Let's wait for rates to drop. Great. You're going to win.
Yeah.
Rates are going to drop. But you're probably going to pay more for the same exact house. And your payment's probably going to be the same, if relative. Not more, than what you can get it for today. So if you can stomach the payment today, secure the asset. Secure the asset.
Yeah, very
so
important.
then when rates drop and you have all this frenzy and all these buyers in competition, you're not going to stress about that. You have an asset that is most likely appreciated in value, and you can now refinance it. You can refinance it and lower your payment. So today's rate isn't going to be your forever rate. It isn't. But people want the lowest rate and the lowest price.
Yes,
but with supply and demand, that just never happens.
It never happens.
You can't do that.
My buddy, he was like, I'm gonna wait till the rates come down. I'm like, we sold his house like right at the top of the market. Mm-hmm. We were close, right? He was trying to time it. He's like, oh man, like my Zillow says my home's up $20,000. I should have waited. I'm like, bro, we did really, really well.
Yeah.
Like to try to time that, you could have overshot it and missed it. Right now, you got as much money out of your home as you possibly could, according to Zillow.
Right.
The all-knowing Zillow. Right. And so, like, you're sitting on a couple $100K. Now you want to get back into the market. You want to get into ripping. So, I sent him to you the other day.
Yeah, it's one of those things where, it's tough, and all we can do is educate. It's all we can do. All we can do is educate. Hopefully, they make an informed, wise decision. Because we're going to be there for them regardless,
right?
Whether they wait or not, we're going to be there.
You ever sit there just like, oh.
Of course. There's been many times where I'm like, I really think you should do this now. I'm not going to make you. You've got to make this decision. But here are the pros and cons. Here's the pro to doing it now. Here's the con to doing it now. Mm-hmm. And here's the pro and the con to waiting. But if we look at that, nearly 70% of all homeowners across the country have an interest rate below 4%. And they're sitting on, most owners have 50% equity in their home.
Right.
There's no incentive for them to sell. Why are they going to sell with a rate at 3 to go buy at 8? There's no incentive.
Yeah.
That's another reason why we have a constrained supply.
You only have people who absolutely need to sell.
So as rates drop, there will be more sellers willing to sell, but not at the rate that buyers flood in. It can't keep up to the demand that's just sitting there waiting. I hope people take that information and they go, okay, I'll bite this bullet now. I know I can get a lower payment later, but we can't make them drink.
Yeah,
right.
I know.
We can lead them to the water, but we can't make them drink. All we can do is educate.
I appreciate you.
Yeah.
How do people find you, Dan?
You can find me Central Valley Strong on Instagram, Daniel Sosa on Facebook.
What's your website?
My website is centralvalley.mortgage. So there's no .com. So it's centralvalley.mortgage.
So if you're in the market considering it, definitely reach out to Dan. You will definitely get a fair shake and a great interest rate with Dan.
Yes, you can with Lance McHan.
There you go. I love it. Thank you, everybody. Have a great day.